I'm hearing in my ear, Jamie, that the S&P is at like session lows. Obviously, this is a lot of fear going on from what's happening elsewhere in the world today. I wonder what your advice is to big corporate customers about how they deal with this, what seems to be a new normal in terms of volatility, whether it's induced by the Fed, whether it's induced by what's going on in Ukraine or elsewhere.
Well, basically, they've got to get used to it. We have, first of all, market volatility is not the same thing as the economy. And the economy looks like it could be pretty strong for a while. Obviously, there are things that are going to upset that apple cart. Market volatility, unless it affects the economy, most of the people don't care. They don't pay that much attention to it. So I think you will inevitably have a lot of market volatility, both from the lack of bipartisanship, the reversal of QE to QT. That's a very complex thing. Rising rates, the market's already kind of high, which makes it so. I think that's kind of a normal state of affairs. I tell most people, I worry about serving my customer. I want to be there for these customers day in and day out. I'll deal with the market volatility like the weather. Well, that's fine.
But customers do worry about volatility because it changes their ability to make clear decisions over a time horizon.
I think very few do, actually. And I think confidence is not driven because of market volatility. It's this rule of law. Is the country going to grow and stuff like that? So, some people react to market volatility. If it starts to affect the economy, like capital investment, consumer, real consumer confidence, then the Fed will probably slow down what it's doing. And they don't want to do that. But my view is build the business for the long run. You're going to have some tough times. That's what we all live with. So.